This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are into the week. This is a Tuesday morning when we are coming to you live as always from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Sonia, and Rima is joining us today as well. Guys, hi, good morning.
Hi, good morning.
Prashant. What a good run it's been for our markets. 5 days on the trot.
Absolutely. And I mean, all-time highs, the DII buying continues. I think there's nothing to complain really, but that is the time generally when the market decides not to oblige. But in any case, the going has been very good.
The thing to complain is that there is nothing to complain. And that is a valid complaint.
That's a good problem to have.
It's a good problem to have, but I mean, you know, as you said, when you don't see, and like Sanjeev Prasad yesterday was telling us, right, that he can't see anything which will cause the market to fall. Usually that is the point where, because you don't see where it comes from. I mean, something comes from, but you know, we'll take it as it comes. And this morning again, we don't have negative or positive cues to react to because US markets were out on a holiday. But I'll start with yesterday's price action here and where we left off by 3:30. So in the last 1 hour, the Nifty actually saw a sharp pullback, about a 60, 70 odd point pullback, and it fell. You know, we were cruising along and we would have sort of ended around 22,200. We actually ended at about 22,120 or so. And by close, by the way, it was a mixed screen. 1,500 stocks were higher, 1,000 stocks were lower. It's not a one-way kind of market, a lot of two-way flows and big liquid mid-caps where there were large volume-led losses as well. So I'll get to some of this in just a bit. By the way, volumes overall, if you look at the NSE 500 as a basket, for the last 4 or 5 days, volumes have been coming off even as the market has been moving up. That is not typically a good sign, but I mean, more on that later. Now, close on the Nifty was just under the previous all-time high, which is 22,126, right? That's where we kind of left off. Many will actually point to this price action from yesterday and say that, you know, this is the third time that the market is doing it. The first time the market got to this level was the 15th of January. And then since then, you had two other instances and now this yesterday as well. But it's just one day we crossed over, we saw a throw over, and then the market sold off. Now, just a couple of points, not very much from the US because US was shut, but it was a holiday. But US Treasury futures are indicating that yields perhaps across the board, across the 2-year, 5, 10, will open up between 1 and 5 basis points. You know, if there is one takeaway from the US market, of course, stocks have been doing well. But apart from that, rates, the rates market, the bond market has been buzzing. You know, we are at 4.3% or so on the US 10-year. And that is going to be the focus because data, etc., is coming strong. If you remember, on Friday, we had once again, US markets not got a chance to react to it because one data came during market hours and the other one came towards close. But inflation numbers are the problem once again, and yields are the way the market expresses its reaction. Now, the Nifty, just to circle back to the levels, maybe headed to 22,500 once it gives you a decisive close above yesterday's high, which is about, as I said, 60, 65 points away from where we are right now. I mean, of course, we're at all-time highs, so you can project levels higher based on earlier declines, but 22,500 is one such. Support comes in on the downside at 21,728, which is the 20-day moving average. And then below that, there is a trend line, a downward sloping trend line, which is at about 21,665. So these are the two support levels. You know, I've said this last few days, and the market, by the way, has given you perfect opportunities. Opens higher, opens with a flourish. It completely flatlines. We saw that yesterday as well, and then sees another move higher. On the Bank Nifty, it is still not broken above the previous swing high, which is 46,892. So that is the first order of business for the Nifty Bank. And supports for the Nifty Bank come in at 46,118, which is the 40-day exponential moving average. And then the 20-day, which stands at 45,670. We left off at 46,535. The Gift Nifty is indicating a flat kind of a start. Pullbacks and lower down around the averages, or maybe even slightly higher than averages, but closer to them, I think, is the place to actually buy in, because you are at elevated levels and, you know, if you're trading on a day-to-day basis, better to get some risk reward in your favor, some comfort in your favor as always. Sonia.
Oh, absolutely. And the momentum is intact, right? There's nothing to suggest that the market is going to change track anytime soon. I mean, just look at the data. The Nifty sitting at record highs. It closed above the 22,100 mark yesterday. And now there are a fresh set of leaders emerging in this market. Of course, we've seen Reliance and how it's really led from the front. Yesterday and in the last couple of days, ICICI Bank has started to sort of assume its leadership as well. And now the Nifty is up 600 points from last Wednesday's lows that we saw. So clearly the momentum is intact. There's nothing to suggest that this market is going to see any kind of slowdown anytime soon. The Nifty Bank, though, although ICICI Bank has started to perform, the Nifty Bank is still 4% away from record highs. So let's see whether that provides the next leg of leadership in this market on the upside. There's large money coming in from domestic institutions. There was a big buy figure yesterday yet again. And put together in the month of February so far, almost 18,000 crores has been pumped into the markets just from DIIs. Now, two stocks that I'm looking at very closely. One, of course, is Coal India. After the kind of damage that it saw yesterday, brokerages have cut target prices. There are downgrades on Coal India after the fall in the e-auction premium that we saw yesterday. In fact, Jefferies says that the earnings are set to decline sharply and they've cut their target price to 520 on Coal India. So perhaps, I mean, which is still well above the current market price, but perhaps there could be some more pressure today as well. Apart from that, I'm also watching out for Kotak Mahindra Bank. There are management changes there. KVS Manian has been redesignated as the joint managing director. So that will be another stock in focus, given that you have the Bank Nifty, which is, sort of front foot forward now in this rally. We'll be watching out for a lot of these banks as well. But largely looks like the momentum is intact. It's just that, there is a bit of a breather maybe you can expect today. But I think the trend is on the upside.
Especially given the way the market sold off 60 points from the day's high in the last 1 hour of trade. But just to line up the big cues for the day, it's a Tuesday, so today you've got the Nifty Financial Services expiry. US markets resume trade after being shut yesterday, and tomorrow, minutes of the Fed's January FOMC meeting will be released tomorrow. And remember, last week's inflation data has pushed back expectations of a rate hike. You get the ABB Q4 calendar year 23 results. It's December ending. So ABB India will be reporting their numbers, today. And you spoke about Coal India. By the way, Coal India goes ex-dividend by 5 rupees and 25 paise today. So that will, show a stock decline on the back of this development. In terms of flows, yesterday, because US markets were shut, it was a thinly traded volume. So gross volumes were on the lower side compared to what we typically see. The DIIs bought for the 6th straight session, and they mopped up shares worth 452 crore in the cash market, while the FI selling continues selling about 754 crore, taking their February cash sales to about 14,600 crores. So those are some cues that we'll watch today.
All right. Well, there's plenty to talk about, and we have lots of opinion flowing through this morning. So let's get straight to it. First up, Lawrence Belanco of CLSA says that investors should monitor the relationship between the Magnificent Seven Index, Japan and India, and the US Treasury yields. If the yields move above 4.33 to 4.36% area, if the US Treasury yield continues to fall and the Magnificent Seven Index, Japan and India start to fall too, then it is likely that we have reached a level in yields that are seen as restrictive, even for the idiosyncratic trends in the Magnificent Seven. India and Japan, this would imply a more correlated decline in risk assets as was seen between Q4 FY21 and Q2 FY22.
Okay, well, we've got Sunil Thirumalai of UBS who says that bulk of India's outperformance over the long term has been driven by valuations rather than earnings growth. Strong foreign inflows witnessed across major EM markets ex-China and steady domestic institutional flows in the past couple of months have driven liquidity in the market. Over a longer-term horizon, they see that revenue, operating profits and net profit growth of Indian stocks is ordinary in the emerging market context.
Okay, let's also get you some money market views this morning. On the rupee, you have Abhishek Goenka of IFA Global who says encouraging January trade and services data brightens the prospect of current account deficit printing below 1% of GDP in FY24. Overall, the balance of payment picture looks comfortable despite the recent FPI outflows from domestic equities into domestic debt. The concern on the current account deficit front stems from possible disruptions in supply of crude through the Red Sea. Geopolitical developments will therefore have to be closely watched. Barring any adverse geopolitical development, he expects the dollar-INR pair to remain stable in the 82.70 to 83.40 range over the medium term.
Well, Vishal Goenka of IndiaBonds.com weighs in on the bond market, says that the market is likely to remain muted after the long weekend in the US, with marginal bias for yields to go higher. Inflation and growth data continue to come in strong, the US leading to continued selling in treasuries. Not much economic data this week, which is the FOMC minutes on Wednesday night. He expects a 10-year benchmark to trade between 7.08 to 7.13% range.
And we've got a lot of stock-specific action to track today, so we'll get to it in just a bit. In our special Top 10 segment, we're looking at HDFC Bank, Kotak Mahindra Bank, Deepak Fertilizers, Minda Corp, NBCC, Titagarh Rail Systems, Torrent Power and Paisalo Digital. On the back of negative news flow, you also have Whirlpool and Sula Vineyards. These are two stocks that could open in the red.